All right, let's have a look and let's see. Let me get rid of all this nonsense and just look at the charts, look at the candles, because that's what I like to do. If anyone has started to watch my streams, then you'll know that I will spend a large portion of my time looking at candles. I really love candles, and I think that candles can tell us everything we need to know. And the more and more you analyze candles and the way they form, the structure, the formation of the patterns that form, you'll begin to understand what's going on in the context of levels, and obviously the volume matters too. When you put these pieces together, you can start to actually read candles and ascertain future price action. Yeah, it's obviously not 100%. It's all kind of probabilistic, but and a lot of people don't really kind of spend much time on candles, and that's why you have all these kind of other kinds of things like bars. I see a lot of people use bars. A lot of people will use this Heikin-ashi candles and Renko. I think all in all, you can use anything, but you have to become a master of that thing. And for me, I think there's nothing more pure as these Japanese candles, and the more and more time I take to look at them and to study them and to understand them, the better I become at being able to read the market, and then also that'll help me to form a bias for the future. So if we go back to the month, and this is quite important, this was our previous month candle, was January, right? And in one of my previous streams I said that this wasn't the top, okay? Because you need some kind of formation like this to form a top on the month. So you can't just, if you ignore the current month that we're at now, that on its own isn't going to be the top. You're going to need another candle to do something to signify a top. And usually it could be some kind of swing failure. So you see here the previous candle on the tops where the liquidity was taken from the top of the candle before the price came back down twice, and you would expect that. But also the other thing that I was talking about in my previous streams was this monthly level. So here you have a very important level, the monthly level, and there's no reason to think that the price can just go through that level, because that's a very significant liquidity level on the monthly time scale. And then if you go a bit further up to the 3-month time scale, it's also a significant level on the 3-month time scale. It's a 3-month level. It's been washed, but it's still there. And obviously with candles, you can break it down. You can go to the 2 months. Obviously on the 2 months, it's not there. But I'm just saying that with candles, you can go to different time frames and see what the time frames are saying. And that will give you you can formulate an idea of what is required for the price to continue. And so this is a very natural area for the price to come into resistance, especially since the previous month hadn't yet hit that level, hit that target, right? And so what we experienced last night was the price coming into this level, being rejected, coming back to test, taking liquidity from this candle here, and being sold into, basically. And what that happened is that there was a large amount of liquidity underneath this level here, and it was flushed out. And then once you had the formation of this candle, once this candle printed on the 1 hour time frame, this large candle, if I bring the volume chart, you can see it's a increasing volume on the this red candle. I think some people took short positions off the back of that candle, yeah, and other people dumped their positions, and there was a liquidation run, and it went down and it cleared the liquidity all the way down to, how far do we go? These lows. Anyone who had a stop underneath all of these lows would have been caught out, would have been liquidated. Yeah, so that's basically what happened. This kind of behavior is quite healthy for the market. You do want to clear leverage, over leverage late longs, because that rebalances the market. It doesn't, because otherwise it gets too overextended and it overheats, and this kind of behavior is quite normal. Yeah. So obviously this is looking quite scary now, because for a lot of people we've made a new high, that's a higher high, and now what has happened? Usually if you want continuation, when you make a new high, you have to consolidate above the previous high. So this is normal behavior. Normal behavior would be consolidation above this level. Yeah, that should flip into an SR flip. So naturally last night or yesterday evening, I knew about what needed to happen, and on the lower time frame yesterday, what happened, what I saw was this. I'll show you. What time frame was I looking at? They were all basically saying the same thing, but I was actually looking at the 5-minute time frame. And you'll notice here, look, so I had this level marked out. I had it mentally marked out. I didn't actually mark it out on the charts, but I saw this I saw the price grinding down until it finally hit the previous high, and we hit it once. We came down to make the second wick, which was an SFP, and then this formation after an SFP candle is bullish. So you have this wick that goes down, it takes liquidity but closes higher, which it did. So actually it went lower than this candle low and this candle low into the level, closed higher, i.e. it didn't close lower than that level or lower than these wicks, it closed higher. So it was the third wick down, it was the third one, but it actually closed above these wicks like that. Yeah, and then I saw the price go down and the candle get immediately reversed. So it didn't go lower than this level, and then I saw a reversal on that candle. This candle was a reversal candle on the 5-minute time frame. Yeah, see that? This red goes down, and then you have a bullish engulfing on the 5-minute into this wick, and actually it closed higher as well. So I was looking at that. So is it closed higher than this candle? This wick, this doji, this red doji is my reference. When I saw this candle close higher, I took a long, okay, because I saw that that was a reversal pattern forming into a level which I was looking for longs. I was looking for a long into that level. For me, this is a reaction. This whole structure is a reaction, okay? And so I took a long, and my stop was here, because the thesis is long now that the price is turning. This is a reversal, so I don't expect that. So therefore, if it made a new low, you'd get stopped out. You wouldn't want to be in that trade, because you're not expecting that. You're expecting this whole structure and this whole formation to reverse, and it did. So I knew what I was looking for, and you knew where I was looking for it, and when it appeared, it presented itself, you know, you take it, you risk 1%, you only risk 1%, and see what happens, basically. And last night I set my, basically I was looking at this this high formation here, and I wanted to take profit. I front run the TP at about 420, something like that, and actually it went over, and I took profit automatically. It was in the middle of the night, like 2 a.m. and that was it. My trade was done. And then obviously when I woke up, I set my trade to break even because I didn't want to lose. And the thing is, you don't know if the price is going up or down. Once you start hitting your targets, you have to take your profit, so that the trade now becomes a risk-free trade. So if you do get stopped out, you've already taken your profit, so that you don't mind if you get stopped out now. Because my thesis wasn't necessarily that this was go to the moon. My thesis was that off this level, we would at the very least go back to the top of the range. That was my idea. Yeah, I wasn't expecting a breakout. I was just expecting for us to react off this bottom at least once. I didn't take the short this morning, but this is a very viable short. SFP of the highs into the monthly level. And you know, when you look back, you should always look back at price action and try and analyze it, because it always repeats. So if I was to pull a range pull, you'll see how the price went into the value area high, took the liquidity from this level, which was at the monthly level, and that was a very viable swing failure pattern trade off this high here, because you went into the value area high, you had a reaction, and losing the point of control was also another viable entry. You could have had a wider stop, but losing the point of control when you're expecting the price to go up is bearish, you know. And obviously a lot of people had that same idea, and the price just sold off basically. So anyone who took a short made a good amount of profit in that. I didn't do that. I was just stopped out. Okay. In effect, you could argue that I did take a short. I took a short because I had my stop somewhere here, somewhere at this level, probably here, and I was just stopped out. So I did go short. I market shorted my position, and I was stopped out at break even. I think a lot of people had that same idea, and that's why you had this kind of drop down, because you had a lot of people shorting and a lot of people getting stopped out, and then there was just a cascade of liquidity that was taken. That's fundamentally what happened. Is this bearish? Yeah, that's a good question. I think taking liquidity from the highs and for the price to come back under isn't bullish. Yeah, this isn't bullish. For us to go above the highs, take liquidity and come back under, that's not bullish. But we can't say that it's bearish yet, because we're still in the range. That's really what it is. When you if I do a range pull, let me get rid of this one now. From when we entered the range, so basically from this little crop of consolidation, that's probably where we entered the range. From this candle here to now. Yeah. That's deviation from the range. It's like a failed auction into the liquidity level, back into the range. We had the same thing here. We had a deviation from the range, back into the range, deviation from the range, back into the range. This is the same thing, but on the highs, deviation and back into the range. I mean, it's neither bearish nor bullish. It's just we're still ranging. That's basically what's happened. Fundamentally, that's how you have to view it. We are still range bound, and we're still ranging. We're not going down, we're just ranging, right? A lot of people I saw on Twitter, they had this kind of triangle drawn out, and I actually drew that triangle, and I think I drew that triangle before a lot of people. What's interesting about this fractal, this harmonic, is that it did work. But anyway, that's by the by. Let me see if I can find that. There it is. Okay. I think it's quite bearish to go break above a triangle to come back inside it. I think that's quite bearish. If this is what's actually happening, then yeah, I would say this is quite bearish, right? But you know, when you break one pattern, which is this triangle, because we've actually just broken the pattern now, yeah, you could actually create another pattern, and we just have to wait to see what forms in lieu of this pattern or this shape failing, yeah, because technically speaking, on a pullback you shouldn't really come back into the triangle. If this was a correct breakout, then there's no reason why we should come back in, yeah. But the reason why we come back in is because there just isn't enough liquidity to keep the price going. There was enough interest after we had this kind of pump, you know, here. There just wasn't enough interest to keep the prices above the highs, you know. Even if we lost this SR flip, which is the previous high, if you would expect people to start placing their orders somewhere, you know, at any of these levels, you know, like somewhere here, and there was just no interest. Nothing was able to hold the price, and so there was a lot more supply and not much demand, yeah. And this bounce that we're experiencing now is not demand, and I think a lot of people kind of like, oh my god, the price is going up, this is bullish. This is not demand. The price going up here is not demand. All this is are people who've shorted taking profit, and usually the way they do it is with market buys. This is what this is. They're taking profit, and all this is take profit, and then eventually what could happen is that you're going to get people start shorting again once they see that the price has stopped moving up. That's usually what's going to happen. So I think what you have to understand with the way the price moves is that to go up you need to build shorts at the highs, because that's how you get the price to go up. You squeeze up, yeah. Usually when people are going to long, they long in the lows, they're not longing in the highs. And so usually when you have the price goes up, it's because the price squeezes up. And actually this, not only is this expected, it's healthy for the price to go up. So the price going up, obviously it's squeezed up, you know, because as the price went up, we took the liquidity from these levels. So there's a squeeze up. We hit a massive liquidity level, which was sold into. But what you actually have done now is you've cleared all of those cells. You've cleared the liquidity. So the next time the price goes up, if it goes up again, I mean, we don't know, but let's just say hypothetically that there's still a lot of interest and people are still longing to high heaven, because they're just longing. There's just so much interest in Bitcoin. The price starts working its way up. There's going to be a lot less liquidity there, and so the second time, the third time, the chances of getting through are going to be higher, and it's just the way it works. So I mean, I think losing a triangle is bearish. I think this triangle idea has been invalidated, so I wouldn't even consider this triangle anymore. I would focus on, first and foremost, I'd focus on the range, the wider range, and then I'd be focusing on seeing if something else forms, like any other kind of structure. But at the moment, you know, that's a higher high. Look, this is a higher high. This is your higher low. You know, so we still haven't changed market structure to bearish. This is still on the 4-hour time frame. This is still bullish market structure. We needed to make a lower low, which haven't done that. You see the price stopped here. That's not a lower low, that's still a higher low. This could be a higher low. So you have to bear that in mind. So we haven't yet changed market structure on the 4-hour time frame. On the lower time frame, yeah, I think we have, but that could always change. So look, so on the 1-hour time frame, higher high, lower low, yeah. Lower low, lower high, lower low, higher high, higher high, higher low, lower low. So there's a lot of changes in short-term market structure in this range. And obviously this one has gone and made a lower low here. You'd probably be on the 1-hour time frame, you'd be expecting a lower high. But on a higher time frame, we're still maintaining bullish. So there's a little bit of divergence in the time frames right now in the way the structure is forming. And obviously it's never bullish to come back into the range after you leave the range. It's never bullish for that to happen. But at the same time, we haven't made a lower low. I don't know if this is bearish. I think we're still ranging. What day is the 3 days? So the 3-day candle ends today. So just focusing on candles now. Forget about this shitty triangle stuff. Let me try and figure this out. Weekly. It's still in the range, huh? Look. We've come back to the bottom of the range. Still on your stream. See you later. Yeah, I don't know. I think this green candle is at the moment still holding the range. This one. Just until we get like a weekly close outside of this green candle, we're still everything is still an inside candle. This green candle here. Yeah. It's got a pretty short wick. But actually all of the price action is within that candle, within this first green expansive candle. Yeah. So even though we've taken liquidity at the top, even though we've come into a higher time frame monthly level, we're still bound by this candle. and that's the reality of where we are right now. So, and the thing is, we've tested the top like once, twice, 3 times now. We tested the bottom twice, once, twice. Maybe we test the bottom again and see how much interest there are. And I think that's how this is gonna, how you would play this out. And obviously on today's 3-day candle, you're forming this large 3-day doji. And I think this candle that we're forming today is gonna take over. And I think that's quite important to bear in mind. Yeah. So even though we have this like higher time frame weekly candle from the start, from the first expansive candle that's holding the price, which I drew, all the way to the top of the candle down to the base, it's holding the price. I think on the shorter time frame, you're going to get this doji that's going to be formed today, and that's going to be your new kind of range on the 3. So if suddenly we get a 3-day candle close underneath this or above this, then that's going to tell us the direction of continuation. And in the meantime, I think the thesis is correct. We just range this candle now. Yeah. And if you want to just break it down and put it on the higher time frame, it's pretty much within that weekly candle still, you know. It's just that on the 3-day candle it's a little bit higher, and it's very possible that we're forming something else, you know, like, and people are assuming this is like, look at it, it looks like some weird head and shoulders or something, and we've obviously lost that triangle, but you know, it's very possible that we're forming something else. I don't know. Let me zoom in a bit. See if I can see anything else. It's possible. Look at that. Is that not possible? Make it white. So annoying, white disappears. I need to figure this out. So annoying. Trading view, so annoying. Same as one, not white. Okay. The bottom works for sure. See that? This definitely works. Tap, 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 tap. Above, consolidate over. That's definitely correct. Obviously these go into the top, which lines up with that. The outside of this parallel channel look legit. Look fine to me. So the next question is the midpoint good? I think it's good. Yeah, look, kind of good. There it goes, under, over, down, over, back to test, support, support, resistance, through, support, support, kind of not really, then resistance, then not really, and then not really. Kind of there is a channel, it's just, and the middle part is very confusing. Maybe if you zoom in a bit, lower time frame. Oh, it's not even on that one. Where did my channel go? Let me see what it's like on the 30-minute. Where are we in now, the price? Yeah, we're above it. I do like the edges of this channel, to be honest with you. I do like the edges. I'm not sure about the midpoint, but I do like the edges. And maybe if you combine that with a volume pull as well, from when we enter this range, which is this candle here. Actually, maybe you can do it from when we enter the channel. And I think actually this could be good because we have now a clear, definitive lower line that we need to lose before we actually start making lower prices. You know, like if we do lose this channel, then maybe we would be looking for lower. But I think until we do, maybe we are still range bound and we're still making higher lows and higher highs. Let me do it from where we enter the channel. And where does that value area low line up with the lower part of the channel? We mark the POC in there as well, just for reference. See how we're coming back down. There's a little bit of bearish sentiment now. I don't know if you could short or long right now. We're right in the middle. I mean, if you were to short, you'd have to, where would you put your invalidation? It's always the same question. Where's your invalidation? You'd have to put it above one of these candles, you know. Maybe above this one here. This whole candle would be your invalidation if you wanted to short now. You could short now because we're pumping up a little bit, but you're still kind of shorting arbitrary in the middle of nowhere. So this is your kind of range, your volume range. We'll put the value area high. Get rid of this range pull. David is saying dump it. That's funny. David, don't be so negative. We're going to go to the moon. Let me get that weekly candle going. It's right there, it's right underneath it, see? So we're definitely, at least to the bottom of this channel, we're within range. We literally have to close outside of this. Like, I think any close underneath this candle, and we're going to go down. That would be the confirmation for me. Like, close the price, and we're going down. And it's very difficult to short at lows, but at least you know then that we've lost levels, and then we're just heading down to wherever the price goes, you know, like wherever there's liquidity. And you'd probably have to see where the next real liquidity is. Oh, it's quite light, huh? Maybe down here, see? It's like you'd think, okay, where am I going to take profit? If we were to lose the bottom of the channel, we were to close underneath this candle and something like that, you could short then because you have a very easy invalidation. Yeah. If we didn't SFP this low, you could short and you could aim for the point of control probably, because it's quite... Yeah, I don't know how many people are going to have their limit orders there. They're probably going to put their limit orders down here in the lower part of the range. They wouldn't want to catch it. They'd want the price to come down you know, and just fall down like that, and then they'll be looking for longs to go up. Let me see where this one is. This 6.6. Yeah, I'd love for the price to come back up to the point of control. It almost did, but I don't really like to just. I almost want the price to do this, you know, like I almost want the price to go down, form on the value area, come up into the point of control for a short. That's what I would like to do. I wouldn't want to just short this, you know. I kind of want the longs to load up now, so that the price goes up with longs, and then when people are taking profit, to short that, and then you could enter a short, and you're not going to be a short sitting up here, but you are going to be the second best place, which is at the top of the range, you know. And who knows how far the price is going to go up, because you have some gaps here in the way the candles are formed. It's very possible the price could spike up to that line just to come back down, you know. It's very possible, or it could just match up with some of these levels here. Just kind of, it's possible the price could spike up and then go back down. I think you're going to want to wait, and I think this is the short to have to be had, you know. If you want to short, you wait for some kind of invalidation. Maybe we lose the point of control, maybe we push into the point of control and then kind of lose it, so you have some kind of invalidation, and then you would aim to short that. I don't like shorting like this, you know, because I really want the longs to load up to take profit to short, and then that would look really bearish. That would look bearish, because the other possibility, and everything's possible, is the price continues going up and then you make a V-shaped recovery. It's very possible. V-shape is always possible in a bull market, so you have to bear that in mind. So why would you short? You have to wait for some kind of reaction off a key level, like the point of control, like the value area high, into the golden pocket, and at least then the longs are going to take profit, and then the price is definitely going to pull back, and then you can short, because at least then you can aim for the value area low, and then it's going to look really bearish again, you know. It'll just look like a lower high and head down, and then maybe then, because the people who are longing here, who are going to be longing here, yeah, as the price comes down, you're going to get people longing, because you're in a value area low. You're going to get people longing, you're going to get shorts taking profit. It's only going to happen once. It's not going to happen 5 times. It's just, longs only have one attempt at this, because when the price comes down here, longs, and it comes back up, you're not going to get a second attempt at the long. Yeah, that's very unlikely to happen. it's more likely that now we're going to go try and test the lows. Just looking at this price action, we're going to test the lows, and I think what you're looking for a much longer long, like a higher, like a swing, dare I say swing long, but like a higher time frame long, is you want a sign of strength. And so there's two types of sign of strength in this kind of price action. One would be to recapture this range up here, yeah, and you have that low wick there. See that low wick there, this low one, yeah. If the price can somehow get there, then that is a sign of strength, because it really would require a V-shaped recovery to get up there, and that's a sign of strength. The other sign of strength in my mind is to lose the lows here, to lose this low, and to come right back up, back into the channel, back above the low. Yeah, that's a sign of strength too, or it's not a sign of weakness, because a sign of weakness would be to lose the low and to continue down. Yeah, so right now what you're really looking for is a sign of strength before you start aggressively longing. Yeah, you want to see strength, you want to see that there's continued interest in this in Bitcoin, and until you see that, there's no point longing. Yeah, any long now is going to be a very kind of arbitrary scalp, like a tiny long, like just to scalp a position, maybe come in at the bottom just to take a few pips up or whatever, just to make a little bit of profit, but that's it. Actually what you're really looking for now is a short. If you get an SOS, it's called an SOS, a sign of strength, you get above there, or if you lose this and you come back here, and that's what you're looking for, and then you can look for to long it once you reclaim this lower channel. I think I would be looking for a long there, but otherwise you lose this lower wick with a close. It's really important that it's a close, not an SFP. Then you can short that lower level, you know. So you've got a few trades, potential trades on Bitcoin right now. Got a few trades. You've got a short, and that this one would be all the way down. It's like a breakout short of the lower level. You've got and you've got two SOS trades. You've got an SOS up here, you know, an SOS. I think if you get an SOS in the highs, you'd have to take profit at the high, but you're probably looking to go high, because that's real strength. To get back into that higher range, that would be, that's real strength, and that would squeeze all of these shorts. So you would probably be aiming for higher, probably. And then obviously the other SOS I would be looking for is a sign of strength in the lower part of this channel here. That would be a sign of strength here as well. You'd need a sign of strength, an SOS here. This is an SOW, sign of weakness, and this would be the best short here, the back test into the golden pocket, into the POC value area, but you're waiting for the price to come down, form some kind of support here to come back up. So you're looking to come in with the longs taking profit, and that would be, for me, that would be the most favorable short. Yeah, these two longs are only SOS longs. You wouldn't just take them, and I wouldn't take a long here. I mean, you could, but your invalidation would have to be at this low here, and that's the problem. The invalidation is too long, it's too far down, so I wouldn't take it. But you're going to get people to take it, and realistically the longs are going to be more shorts closing their positions to bring it up. But you want to see the price to slow down here, to come back up, and then you can look to take that for a lower high on the 1 hour time frame, and you're trying to continue that bearish market structure on the lower time frame, and maybe then change the bearish structure on the 4-hour time frame, the middle time frame. I think that's kind of Bitcoin. I think we're still in a range. I think this is a deviation, so as long as we're in the range, you could just be looking for shorts at the top of the range. And then for longs right now, just because of the way the price has behaved, I would be very patient with longs. Yeah, and I would be looking for signs of strength to long right now. Yeah, so the next trade here would be a short. You have to wait for a reaction. You have to wait for your invalidation. So if you get a reaction, you get closed back underneath the POC, then you can short because you have an invalidation which will be above the high that's just been made above the POC. And that's basically it, something like that. And I like this channel. Ultimately, the sign of strength would be like this to get back up there and to go off. We can, if that happens, then just long, because we've taken the high and we're above this channel now. Yeah, it would be a breakout long, but you could long that. Alright, so let me just put this together in my hair. I love this shit. I like that parallel channel. Create a group of drawings, rename. What's the date today? 3rd of January. Good. Trades. 3rd of Jan. Look at all that shit. Means I can screenshot it and put it on my thumbnail.